Okay, very good morning to all of you. So thank you for attend this Crude Palm Oil Daily Morning Update with Mr. Marcello, our institutions manager from Phillip Futures. So without further ado, let's start today's daily updates for Crude Palm Oil. So Mr. Marcello, I pass the mic to you.
Sure, thank you. Hi, good morning, everyone, and thank you for attending. And actually, better numbers than yesterday. And I'd like to just make a very brief introduction, as I did yesterday, with regards to this webinar. So the purpose for this webinar is to discuss the view on the palm oil market. It's a daily commentary, which hopefully will become more regular in time, and it's a view with perspective to price range correlations for the day, as well as the supply and demand fundamentals, and its price correlations versus CBOT and DCE related products. This, as some of you are trading the price correlation and linearity versus the edible oils and versus bean oil at CBOT, and with a view as well on the spreads between CBOT, DCE, and BMD. So the webinar will describe the CPO price trends, patterns, ranges, analyzing obviously the futures market of the previous day's session, the market profile and order flow view in order to verify if there is a consolidation and how the price reacts intraday, with view to following day, the cash market side prices and the Malindo supply and demand updates, volume, price and open interest trend analysis, and a Q&A sessions on the price disequilibrium versus current supply and demand expectations and price correlations versus correlating markets. Now, let's start with the CPO futures market. And please feel free at whichever point to raise any questions. I hope to make this as interactive as possible today in order to have as well some of your perspective. So looking into the CPO futures market for yesterday. So the CPO benchmark following a 14 points low opening at 27.70, traded sideways higher in a 26 points range by midday close. The trading was fairly choppy. At times it was within at most 10-point range, in particular between 10:30 and 11:30, and strengthening further from the morning intraday lows at 27.65 to reach an 8-month high at 28.43, 7-8 months high, and closing 25 points higher at 28.09 or ringgit or $678. Now, one thing I'd like to discuss today, which I think it's relevant, is the linearity with reference to the price correlation in the afternoon session, with price distributions at both BMD, DCE, and CBOT being more aggressive as seen recently. So the afternoon session opened at 2800, extending higher at 2815, 2822 as a higher consolidation range before taking off to 2843. This within the hour. It was between 2:30 and 3:30. It was quite aggressive as it moved and showed obviously the upwards trend is still very much alive. So moving the intraday progression for as well CBOT in terms of price correlation from 32.70 by 10:30, which at the time was 30 points lower, to 59 points higher to 33.29 cents a pound by 2:45. This as the daily and RBD all-in January contract open at its overnight close practically flat, following a 45 points retracement in the morning and moving higher to 58.06 to 59.32. and this by the close at 1500. The 59.32 level is quite relevant because, as well as the 58.06 shows what was perceived more recently as a very strong support level at BMD, so the 27.50s and 60s, while 59.32 from a price correlation level showed what was seen as a more realistic top yesterday. Of course, that was breached all the way higher into 28.43. Now, what I hope you will find more interesting is, aside the obvious conclusion for a higher consolidation taking place over the past couple of weeks in the veg oil complex, if we look at the regression and the spread analysis for the past year, this actually shows that though we are very much in full bullish mode with a very strong uptrend now, 40% higher from May lows, nevertheless, we see a weakening effect of the historical large positive linear association, or the R square, between CPO and soybean oil and RBD oiling the Dalian. This more recently to a lower positive linear association in the region of 0.3, 0.4, and mainly seen currently in view of demand. So the weakening of the linear association or the correlation is in function of CPO, soybean oil, and CPO RBD spreads, which it seems to me they are deviating now from historical patterns, and this more aggressively recently due to the current uptrend progression in palm oil market prices. And this is now showing an impact on demand, which we have discussed extensively yesterday, with European and Indian subscriptions falling month on month by respectively 24.3% and overall 38%, and this between 275,000 metric tons for Europe and 316,000 metric tons for India. Now let's look into this deviation and how that has impacted demand, with view as well of not only September but as well Q4 2020. This with reference as well to Q1 2020, which was a prime example of the patterns that we're just about to see. Now, what we have here is two examples of spread analysis and correlation analysis applied to soybean oil as well to RBD oiling. This seen as BMD versus CBOT and BMD versus the Dalian. What you'll find quite interesting is that if we focus, I hope you can actually see my cursor. If we focus on what was seen and perceived as a price balance between the two markets, starting from BMD, CBOT, and looking into the March-May period, we have prices moving to historical lows, with CPO moving to late 1900s, 2000s, with a price correlation at the time in the region of 83%, so very much into a large positive linear association, with where you will find as well points exactly distributed along the trend line, and this showing as well price perceived at an equilibrium versus stronger subscriptions, even though at the time we were in Southeast Asia as well as China, Europe and India into full covered mode, and therefore into a new normal to study versus price distributions and supply and demand. Nevertheless, this specific period between, in particular, early May, moving forward, is where we have seen stronger price correlation and very strong linearity. As we progress forward, what you will notice between June and July, as demand increased, a linearity still maintained very much its levels, but as we progress into August and September, that linearity actually decreases by half, and therefore we move into a smaller positive linearity association, and by inference, we see as well a decrease of demand into the palm oil market. Now, a similar situation actually occurs as well into the Dalian side. So if we look at the Dalian towards the same period, we looked at spreads instead by widening to $184 currently from $125 in May. We see a similar impact as well on the linearity, which decreases, as well as its price correlation versus the BMD market. The Dalian price correlation is slightly higher with an R-square, which is just slightly higher compared to CBOT, but that is because, opposed to looking at soybean oil as an edible oil alternative, we actually are looking at import margins, which build the function between prices seen at a relevant level or at a relevant range from Chinese subscribers, commodity houses, consumer goods sites, versus obviously the competing side with soybean oil at CBOT. And therefore, in a nutshell, if we have prices moving out of equilibrium, therefore we have lower linearity, and therefore we have potentially lower demand subscriptions in the forward months, because prices are seen as less relevant versus competing edible oils. So looking into the market profile and order flow, let's look at the price distributions as we have noticed yesterday. So the CPO November contract yesterday showed patterns for a weakening market and a double distribution structure. So weaker price activity in the morning and lower participation, with BMD opening at 27.70, 14 points lower, with predominantly higher matching at 27.90, 2800. This then trading sideways higher in a 26-point range by midday close at 27.65, 27.91. The strengthening buying activities, as mentioned earlier, further extended prices from a weak morning intraday session by 78 ringgit to reach a 7-8 month high at 28.43 and closing at 28.09 or $678. Buyers were again in control, bidding the lower opening, followed by prices extending by 2.30 with the usual strong covering and minor selling activities. So taking place from 5.30, 1700 between 28.43 and 27.87. The initial range between 10:30 and 11 a.m. at 27.65, 27.83 show the consolidation in the market, reaching a net long of 3,946 lots, with minor covering by midday, as subsequently the distribution of 5,534 lots net long extended prices in the range of 27.71 to 28.48 from midday till 2:30. This again was subsequently followed by an initial covering short leading till 5 o'clock by 7,729 to 27.87, 27.90 at a balance, which was then taken higher with a stronger, higher distribution into the close, with a net long of 3,848 lots, positions moving from 27.91 to 28.09, 28.11. So as mentioned yesterday, this is quite actually a textbook price consolidation, which we have seen over the past week or so between 27.50s, 60s to more recently 28.20s. Looking into the cash market, and we are closing our presentation shortly. The market yesterday was mainly focused on production forecast and concerns for September and Q4 2020, given inventories are still seen rising at best by 2% in August from a month earlier to 1.73 million metric tons, with a modest increase in production by 1.8% to 1.84 million metric tons, as demand instead is still lagging 11.7 to 13% lower to 1.575 million metric tons. There were some concerns that were raised later in the morning yesterday on Malaysian palm exports, which are seeing lower estimates versus the 165 earlier view. And this, given several vessels will slip to September, and bulk now is seen at 1.33 million metric tons for August, including package likely at 1.55 million metric tons to 1.6. So we are very much well priced around those levels, around 1.575 in my view, and the demand side of the supply and demand equation now seems fairly transparent, with a more bullish view for local disappearance, which seems likely have increased to 285,000 tons, though just 2% higher month on month, versus production still very much bullish at 1.84 million metric tons and 1.77% higher month on month. Interestingly, and this might be the case for those eventually looking at some level of corrections intraday today, Lorex yesterday held prices fairly steady as previous two-day levels, as well as local CPO spot at 29.20, as we have seen the Indonesian CPO spot unchanged as well at $715, while PTPM tendering at Belawan, Dumai and Medan areas were priced at FOB equivalent of $695 based on the September neural export duty and including export levy of $55. This is $13 above last week closing tender of $681.75. So the question now is whether the current Malindo spread at $8 premiums will narrow, as Indonesian August production has now seen rising 13.6% to 3.9 million metric ton, and demand falling in line with Malaysian by about 12%, with ending stocks there rising sharply by 19%. This could potentially lead to the tops that we have seen at 28.20s and 28.40s more pressured because of the layering from the upstream businesses hedging anything that practically is between 27.60s and 28.50s or 28.60s, depending if we reach those levels today. So the higher Indonesian rising output may have an impact on the CPO spreads and flat prices at BMD with, as mentioned, layering sales at current levels. If we look now at the cash market side, this is the first half is a slide which is provided by the Singaporean Palm Oil Association through reports going out on a daily basis. But this slide is actually more recently showing not only the 8 ringgit, not only the 8 ringgit premiums in Indonesian CPO prices versus oiling now at 732.50. But nevertheless, if we look into what was previously the same palm oil price comparison, this seems to be very much at the disequilibrium, because if we look again at the demand and correlation price aspect from the beginning of May, actually crude palm oil, Malaysia and Indonesia were very much in line and flat with no premium or discount, as prices were at most $20 to $25 at a premium versus CPO prices locally. So clearly there is a slight imbalance, which at the moment doesn't seem to be fundamentally justified versus the poor demand. Looking into, again, the price correlation in the second half of the slide, you will notice that I do correlate APEX, BMD, although I shouldn't be going into too much of an APEX discussion because I operate mainly at BMD, of course, aside CBOT and other US markets. But nevertheless, we'll take that as a reference. So if we look at the cash market prices versus the futures prices, compounding all that information together, what we find versus the currency rates between the dollar ringgit, what we find more realistically is still an upwards move from 27.36 to 28.35, with a higher range side price at 28.81, 29.77, which I believe very likely will induce a much stronger reversal or correction within that specific range, which is 28.81, 29.77. And now moving into the volume price and open interest trend analysis, this is something I'm sure you guys do on a daily basis in order to verify support and resistance level seen as opportunity and for intraday trading and towards either speculative or hedging opportunities. So what we've seen yesterday is BMD closing 25 points higher at 28.09, with aggregate lower participation by 4,397 lots at 49,026 lots, and a lower open interest as well at 185,503 lots and 2,522 lots lower. This leading to the conclusion that we might see some lower sideways trading today, possibly in line as yesterday, from a lower opening with the market seen weakening because of lower participation and lower open interest, but yet into a higher trend consolidation. So the expectation for today is for the CPO November 20 contract this morning from an opening realistically within 27.84, 27.90 to an intraday low of at most the 60s, 27.47, with an intraday high 28.58 and 28.85. The 28.58, 28.85, as mentioned earlier, is very much in range with the price correlation for the overnight RBD all-in market, and we'll evaluate that throughout the morning how that changes in line with the matching at BMD. That will give us a very strong price discovery, at least for the first half of the day. Having said this, for those of you that have any questions, please voice them. I'm here. And if you wish as well to discuss questions throughout the day, please do so. I've noticed that there's no questions as yet, so I welcome any inquiries if you haven't, as I did during the first slide, because I believe it's quite relevant that we have a more interactive approach, and I'll try that as well in tomorrow's final session.
Okay, first of all, thank you, Mr. Marcello, for the representing and sharing. Yeah, so we still have time, around 3 minutes. So anyone's got questions, may ask in the chat box, okay, in the questions box, so I can let Mr. Marcello know about questions and you try to answer your questions. All right.
Okay, seems like perhaps it was maybe more detailed than I expected. As I mentioned, gentlemen, you have my number, you have my email address. If you have any questions throughout the day, I'm on WhatsApp. So please feel free to voice any perspectives, and hopefully I'll be able to answer your questions and learn as well something in the process. And thank you for attending this webinar. And as well, if you have any specific points that you'd like me to focus more tomorrow in the final presentation, please put those put those topics forward, so I'll be happy to expand and hopefully as clearly as possible.
Yeah, all right. Thanks again to Mr. Marcello for his sharings today. Okay, and thanks for all the attendees who attend this sharing sessions. So same thing, if you got any questions, just send drop an email to Mr. Marcello, or you can send email to us. Okay, feel free to contact us. Okay, so we call it a day, and thank you all.
Thank you, gentlemen, and thank you for attending. Have a good day. Bye-bye.
Okay, bye-bye.